Well, with unemployment edging up and inflation stuck above the Fed's 2% target, Jay Powell sees risks everywhere.
Near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path.
Equity prices are fairly highly valued.
But equity markets aren't hesitating. Stocks have jumped since the Fed's decision to cut rates, and traders still see more cuts before year's end. So, is Powell's patience an excuse for being too late, or is this economy really caught in the jaws of rising inflation and a weakening job market? Thomas Hayes, I'll come to you first on this one. Jay Powell didn't have very positive words to say about your bull market. What do you think about that?
Yeah, it reminds me of Alan Greenspan, Irrational Exuberance in 1996. He was right, markets were overvalued, but he was 4 years early. I think the two-sided risk that Powell addresses here, the weight is now shifted to employment. And employment is like a frog in a pot. You can stay restrictive so long, but the minute you start to see the layoffs, that can happen very, very quickly. So we may see a situation where too late Powell becomes just in time Powell, provided we get 4 to 5 cuts over the next 12 months. And historically, if that is the case, the statistics say in an expansion, you're going to be up 16.1% in the S&P 500 in the next 12 months, assuming we get 4 cuts into expansion.
So you think he can kind of resuscitate his credibility by becoming right on time Powell? You think he set himself up well for that?
I think he might get lucky. I think he was irresponsible being this restrictive for this long. He's destroyed the housing market. That's starting to come back now that rates are coming down. We've seen mortgage rates come down. But you've got $35 trillion of wealth trapped in people's home equity that they can't access. The minute rates continue to come down and people can access that, this economy is going to boom.
Dagan, he had something to say about tariffs and prices as well. Take a listen to this.
We've been watching this since the beginning. Half our mandate is inflation, and I would say that the pass-through to consumers has been later and less than we expected. How much of that will continue, I don't know, but the responsible thing from our standpoint was to watch and wait because, you know, it's our job to make sure we don't make a mistake on inflation.
Now, you wouldn't want to make a mistake on inflation, Dagan, if you're Jerome Powell. You wouldn't want to do that. You wouldn't want to sully your reputation by doing that.
Yeah, because 9% inflation wasn't a mistake.
Right. No, you wouldn't want that to happen.
But you mentioned the irrational exuberance speech. It wasn't 4 years, it was 3, just by the way.
You were close.
Yeah, it was December of 96. Bubble burst in March of 2000. Yeah, having lived through it. That comment that Powell made about the valuation of stocks here, equity prices are fairly high valued, is his tell that there is a wild asset bubble. And because of that, there are limitations to how low the Federal Reserve can lower interest rates relative to inflation because of the bananas, crazy nuttiness in asset speculation. Startups, stocks, real estate,
housing,
crypto, housing. People can't, you know how people can capture their home equity? You can sell your house. Yes. That's how you can do it. But I just want to finish this, Charlie, before you jump in. So lending's not tight, capital raising is just fine. And the problem is, if you lowered interest rates to, say, closer to inflation, you're going to ignite even more of a bubble, even more speculation in all of these asset classes. So where does that leave the Federal Reserve? It explodes, and then the Fed, like in 08, has to step in and clean it all up.
Well said. And I will take issue with you, Tom. He did not destroy the housing market. I mean, let's be real clear. If he lowers interest rates, housing prices are astronomically high. If he lowers interest rates, you're going to make them higher because people are going to borrow.
Yeah, no, I think this time you're going to be wrong on that, Charlie. And the reason
are you saying that housing prices aren't like at record highs and people can't buy?
They are at record highs. I think what you're going to see this time, Charlie, is that when rates come down, you're going to see an amount of supply come on the market. To Dagan's point about people getting their equity by selling their house, there are people that are waiting because they don't want to trade out of a 3% mortgage for a 7% mortgage.
So you think prices are going to go down?
I think you're going to see so much supply hit the market all at once that there's going to be pressure, or at least these high prices are going to consolidate for several years.
I can't remember where that has ever happened because not only the supply you're talking about is not new housing. We're not building a lot of new housing, particularly in the Northeast. But, I look at places like South Carolina. Trust me.
Do you know why? Because builders cannot take that risk until they know what
but there's not enough supply.
Yeah.
I'm just telling you.
It's coming. Trump is going to open 500,000 acres in federal land.
Federal land is going to bail out, is going to send housing prices down.
It's going to create supply.
I don't believe it. It never has happened like that.
Charlie, this reminds me
that is historical anomaly.
Charlie, this reminds me of a year ago when everyone was telling me China is uninvestable. Don't dare invest in Alibaba stock at $60. Now it's $175 today. It's one of the top stocks in the market today.
Wait until the Senate.
This is what's going to happen.
Wait until the Senate pushes a bill that delists all your Chinese stocks.
Okay.
The rumblings are there. I will say one thing about Jerome Powell, and this is why he reminds me of Floyd Norris. You guys,
I remember Floyd.
Floyd Norris is an old-time columnist for the New York Times. He was actually a very good journalist, but he had one quirk where he was for years before the bubble burst in March 2000, the NASDAQ tech bubble, which took all the markets down. I covered it myself. For years before that, he was predicting the market was overvalued, it was going to blow up, and then finally he was right. And so what scares me about Powell is he's been so astronomically wrong about so much inflation, transitory inflation, cut rates when during the election last year where he shouldn't have. And is this the one time
you're talking about a stop clock situation
where the broken
right
clock is right where we are setting the stage for what Dagan said, an asset bubble? If he cuts rates, there's latent at least emergence of some inflationary pressures. We see we're well above the target. The economy is kind of slowy. I don't know. It's not sputtering, but there's all these sort of things in there where I don't know. I'm just worried that this dude for a change is right.
Well, he's worried. You're worried. Everyone's worried, I guess. I like the term bananas crazy nuttiness, Jackie. Reminds me of a breakfast cereal. I would like that cereal.
Not good for you. It's not good for you.
It depends on the sugar
I
content.
speak that way when I haven't eaten breakfast because I'm searching for the adjective.
It's a good breakfast. I don't know. Do you see that? Do you feel bananas crazy nuttiness out there? Do you feel like maybe AI is justifying some of this, or take it the Powell direction? Are we going to get the stop clock where he's going to just have stopped at the right time and he's going to ease into this? And Tom is right, and he looks like a genius after all.
I'm not sure. But
since we're doing wild projections,
I will say this. For the last 2 years, as equity prices have been moving higher more than 20% each year, and now this year we're seeing a strong stock market as well. I just keep looking at some of these companies and saying to myself, it's difficult to want to buy at the top. It's difficult to imagine, cyclically speaking, that this market is just going to keep going higher. But to your point, Tom, we've defied gravity, and it does keep moving higher. Part of that, I think, is because of a point that Charles has made earlier on this program, which is that there's a certain amount of capital that just keeps getting invested in stocks, but also that we live in an environment where things are so expensive. Even a regular person is using Robinhood to trade because to keep up with inflation, and I'm not talking about the 2.9% number, but I'm talking about the real number of high prices that never came down that people experience in their day-to-day lives, they feel they've got to invest in this market to be able to try to, find a return that will help them cope with the situation that we're dealing with. So with respect to him, when he stands there and he says, well, the inflation risk is to the upside, yes, we know that. The employment risk is to the downside, yes, we know that. I feel like, once again, he's sort of creating, using the data points to create the narrative that he wants to create in this current environment, which is, I will cut rates, but I'm going to do it very slowly. And to the point that you brought up about the dot-com bubble, it was that there was irrational exuberance in the market, but for 3 years, stocks just went up. And if you sat on the sidelines because you were like me and you're saying, it can't be, it can't be, it can't be, then you lose out by not doing that too.
Yeah. Powell's, his assessment of the risks is very convenient for a guy trying to shed the too late moniker. There's a reason I'm going slowly. But Tom, this lag between when we're out of control and when the market sort of blows up, if that's the case that we're in, you got a lot of money sitting on the sidelines in money markets, right? And CDs, and as rates come down, that's everybody always talks about that avalanche of cash coming into markets. Is that kind of what we have to reckon with or be prepared for in the coming months? I don't know, years.
Forced on the risk curve. I will say, when Powell talks about the indices, 40% is the Mag 7. Mag 7 is trading at 33 times earnings. Their earnings growth has decelerated to 10 to 15%. We're going to see this quarter. So their multiples stayed high while the earnings growth has compressed. If you look under the surface, small caps, 35% earnings growth next year, trading at around 16 to 17 times earnings. Okay. Unmagnificent 493, all the real businesses, all the Main Street businesses are still undervalued. There's a lot to do under the surface. So we could see a situation where the indices, i.e. S&P is basically a Mag 7 index right now, consolidate sideways, and so much money is made under the surface for all these laggards. The number one thing with small caps is refinancing risk. Rates come down, they refinance, small caps go up. They're breaking out to 4-year highs.
How do they get impacted by tariffs, though?
We will.
It's on a company by company basis, and now it's baked into the price.
We will continue to debate whether this is bananas, crazy nuttiness, or just cornflakes. We'll find out as time passes.